Hello, folks. I am excited to see you all again through a new podcast. This podcast is an outcome of the latest article that I written and published, which got in my Substack, got a quite substantial amount of readers. The topic was about shallowness of the tokenization of assets and how it can hurt and destroy investors, whether small or big. While everybody jumped into the bandwagon of digital asset and tokenization of funds to capitalize on the new world economy, the digitally transformed geoeconomy tools and strategies that I had even written a book about it recently published called Myomics. While it all sounds fine, everybody wants to take a piece of or capture a piece of the success story of digitalization of assets. What worries me is most of the people on all sides of the aisle, whether you are on the financial side, the investment side, services side, or on the technology side, uh, all kind of making mistake on not connecting the pieces properly. In other words, what I call it as shallow coupling of all the three pieces. Remember, in the digital asset world, in the modern digital equity world, there are three major discrete components. You need to bring them all together in one way or the other in order to get the shareholder value, return on investment. Number one, the currency, that the financial, I don't call currency as an asset, but for the sake of argument, let's say you have the financial asset, the currency, and you have the real world asset, which gives you the strong intrinsic value to the investment. And then there is a medium of what I call actual money, right? Which makes as a bridge between the financial tool and the actual real world asset, the digital asset as a medium. So, like, I know it sounds confusing for you, while the rest of the world is calling digital asset as an asset, the actual financial instrument and the asset itself. I'm calling it as a medium. Uh, it's so true. Digital asset cannot be the asset itself. What it captures, the real world asset it captures, the intrinsic value comes from the real world asset. That gives you the tradability, the value for your digital assets. Then the liquidity for the digital asset comes through the fiat. Okay. I know the digital asset supposed to give the liquidity by itself. That tend to happen in the open market digital assets, the so-called digital assets, which essentially are cryptocurrencies. The liquidity is of artificially created liquidity has been circulating. All my discussion, it's not about the public market. I'm only bringing this as a alternative investor. By the way, if you are hearing from me for the first time, I'm Maya Kannan. I'm a geoeconomic strategist, a venture architect, a venture capitalist, and a fund manager. Although I wear multiple hats, they are all pieces of the same puzzle that I work towards achieving my end goal of multiplying the investment and shareholder values for my businesses. So, what is uniqueness about me and the funds that I manage? I use geoeconomic strategy. In fact, I wrote a book recently and published, as I told, called Myomics. It's available in Amazon. So geoeconomics was always used as a tool and a strategy for geopolitics until recently, when geoeconomics started becoming a mainstream, and the corporate geoeconomics has become a the new buzzword in town, because the businesses are struggling, the global businesses are struggling to exist and struggling to thrive, struggling to retain their position in the market due to the turmoil in the not just only the stock market, in the global landscape of trade and business. There's a lot of disruption happening, whether it is supply chain, whether it is governmental intervention, tariffs, and all other things, inflation. Everything is working together now as we speak, making it difficult for businesses to wade through and retain its position in the global markets and the trade landscape. Now, coming to the topic, the reason for this podcast is to bring the knowledge of how to really put the pieces of three things together: the currency, the money, and the asset, right? First of all, a lot of people don't even understand that there exist three things. Like, many people mistake currency as money and money as an asset. So why I have to differentiate these three things? First of all, because they are different. Money is supposed to be the medium of value, right? But then there came currency, which initially was a derivative, which was a kind of alienated force, as described by Karl Marx. The value of something, a thing, can be changed through an alienated force, which acts upon it from outside. In a way, in Karl Marx was describing it as a kind of a theory to alienate the value from the labor. So basically, separate the labor, fruit of the labor, from the worker. It's a kind of, I don't agree with the. It may sound like the right logic, but then the fundamentals of humanity and how the world works, psychology of human works, the mechanism of humanity works. It's kind of a lot of conflicts there. Fundamentally, humans tend to possess things, right? The thing could be an asset or a commodity, cannot be the thing in its final form in the beginning itself. The thing gets transformed from one form to the other. So whether you take it as a commodity or an asset, the labor, the more labor you put in, and the more time goes away, the state changes, the scenario changes, the mechanics of how these assets are moving or the commodities are moving changes those values and the state of those things itself. So the argument of the fruit of the labor should actually only stick to the commodity or the asset all the way along does not hold water, because the ownership of that thing has to go from one hand to the other hand when the labor changes, the input changes, and the characteristics of the things changes, the value of the things changes due to those characteristics over a period of time. And that's what we call it as a trade. Trade is time stamped function, right? The trade happened at some point of time in history, not on exchanging a good from one hand to the other hand, not necessarily be the same trade that happens in another point of time, although the same goods and services or commodity might be involved in the new trade, but in its different form or with a different value. So the value doesn't stay. with the thing all the time. In fact, the money was created to make sure the value was not always attached to the thing. It's very difficult to understand. You can go and read my article, and I'll be happy to discuss more about it during the course of other podcast videos. But and then more articles I'm intend to write about it. But I have explained extensively in my book Myomics about these things. I dedicated a few chapters even before getting into the geoeconomics of what money is, what is the what asset is, and what currency is, and all. Okay, so there exists currency, money, and asset. In the digital geoeconomics, the world of digital geoeconomics, these three connectivity, these three, should be the currency part, the money part, and the asset part is getting transformed, into new forms. So the currency, in my theory, the currency is getting replaced with tokenized funds. Tokenized funds. That's the key thing. Tokenized funds. The moving forward in the world of investments, private investments, or even public investments, it's going to be the key to tokenization of the funds itself. Because we are in the time of the world where every country is now getting into massively getting ready to bail themselves out by printing huge piles of currency, including starting from the US. China is already doing it, and the US is getting ready to print over probably I'm speculating, but probably up to $10 trillion to bail them out, because there exist a huge piles of different forms of debt circulating, which scales more than $100 trillion in debt values. I know debt is not a value, but then that's how it is being created. So debts needs to be traded, debt needs to be resettled, and also why over $100 trillion? Because of when we talk about the debt, we only talk about the debt of the government and few other things, but then there exist a huge piles of private equity debts globally denominated in dollars, and that piles have to go through the cycle, and and when they are all getting matured, and that's why every cycle you need to have more supply of money, supply of currency in essence, right, to bail them out, at least temporarily. And at least that's the only instrument the government and the central banks have to bail them out, or temporarily, supposed to be temporarily getting out of the trouble. But then the trouble gets postponed more and more. I know we are in the very huge bubble. It can burst, with either as a consequence of this massive printing or lack of massive printing. It's both ways it's going to burst. So, as I discussed about the massive printing of money, ever than before, this money, the massive printing of currency, the fiat currencies globally by all other governments, and then there existed fiat cryptocurrencies. They're all putting huge pressure with zero value, what you call financial instrument in your hand. If these financial instruments are supposed to be the catalyst to actually create the capital. If you understand what really capital is, the money, cash is not the capital. Cash is the catalyst to be used to create the capital, which creates more products, services, and assets. But unfortunately, we live in the world where the cycling and recycling of this cash becomes the mainstream economy, and most of the cash and money created as a part of it, at least the financial instruments, being circulating in the financial economic world. The real economic world struggles with not able to get the right amount of catalyst, the money, to create more capital, which can propel and uh, accelerate the real economic engine. Now, having said that, my take is always I never would support any investment or what you call an asset without an intrinsic value. So the intrinsic value of an asset comes from the piece of the company, the equity of the company that you hold, and that the company gets involved in creating products and solutions and services and commodities, and the value can come from there. And then the intrinsic value can come from actual precious metals and the other um, rare earth elements, which has the intrinsic value by itself because of its utility and because of its rareness and because of its preciousness, right? Apart from these things, there are real world assets, which modern day real world assets, as a consequence or as a result of development in technology. We have the artificial intelligence, the data, the state, and the human and robotic intelligence can also become the real world assets, provided they're being properly packaged together, right? And then we have the plain old vanilla asset, the real estate, the properties, right? Those assets also should be captured in the digital form in order for you to actually be in the game of digital assets and tokenization. So remember, I'm not talking about this. I'm against shallow cryptocurrencies like Bitcoin. I'm totally against them, and they are useless instruments. I'm not talking about them. I'm talking about the digital assets, the private equity digital assets created with intrinsic value on one side and on the money instrument on this side, on the left side, right? So the idea is moving forward, we can't control the printing of money. As I said, it's not under the control of investors or anybody. It's the way the things are set up. The governments and the central banks are going to make sure to the financial system, monetary as well as the other, the physical systems. They are going to bail out by printing more money. Supply of money, volume of money, volume of. I keep saying money because that's the way everybody understands, but in essence, currency, 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 volume of currency. Of course, volume of currency increases. That will put pressure on the money, right? The real money that you would be holding in one way or the other. As I mentioned in my book Myomics, I talked about more than 10 different forms of money existing in the world. So money is not currency, period. And then money itself should not be the asset, and money has to be, converted into an asset if you want to be very wealthy and if you want to continue to multiply your wealth. So that's a game, right? The cycle has to complete from currency, how fast you move the currency, convert the currency into money, and how fast you convert the money into assets, acquire the assets in original form or the digital asset form. That's a game. And moving forward, why I'm supporting and I'm backing the tokenization of funds as a new game in the digital geoeconomics, because we have gone way too beyond in terms of currency printing, right? I think, in my opinion, which I learned from other expert economists and gurus in this world, we I'm a historian too. I study history for the last 5,000, 6,000 years. So I'm sure we are in a era where there's going to be a great reset needed, because too much of supply of money is has to come to an end, and they are talking about printing more. So the pressure cooker, right? There's only to some extent the cooker can hold the pressure, it's going to explode. So we are in that stage. And if you are listening to me in 2025 April, and you will in the future, you will come to know by the time that the inflation is high and the money that you're holding, the cash that you're holding, has almost zero value, although you may be having so much of cash in hand. And many of you might have already made mistakes in terms of, created your mechanism around you to which puts more cash money in your hand, and you struggle to convert that into wealth. If you are one of them, then this theory and this concept that I'm explaining is going to be critical. So I touched upon the ownership transfer, right? So it's inevitable for the transfer of ownership happening from one to the other as the trade happens, as a thing, whether it's a commodity, an asset, goes from one hand to the other hand, and everybody has to make some profit out of this exchange of these goods, right? Goods or assets, and what you call value as well. If you're exchanging assets, you're expecting value. If you're exchanging commodity goods, you're expecting profit. What is that profit? The profit itself is pushing to create creating new money to pay for it, right? Where the profit is going to come from. So in the book, I have mentioned one of the forms of money, more than 10 forms. One of the form is profit, corporate profit. If you're a corporate, you have to, the only way you will be measured as a success, other than the stock value, which can go up and down, but your profitability, right? Your quarterly statement makes a lot of difference, right? As we speak, now Elon Musk went in front of the board yesterday, and a lot of pressure because of the their quarterly earnings plummeted, because of his distraction into the politics and all, right? So now he's going to go back to the table in Tesla to create more products and solutions, because you need to keep the economic engine for the business going, and the business is connected to the economic world. And for that, you as a corporate leader, or you as a leader of a nation, should understand the geoeconomics of it. You can't ignore it. The geoeconomics has become integral part of the trade, business, and the production of products and goods, right? You can't ignore it. So that's how the profitability itself is a money. Now, the money has to somehow, a newly created money from the currency. Currency has to be printed in order to create the money that will pay for the profit. And then the value for the profit has to come from the assets, right? The real world assets. So in the investment world, what I'm proposing through Myomics, and I'm not the first to do it. Large players already started doing it, but I've been in this in the form of research and development and the framework development for over 7 years now. So I have created it took so many years for me to validate, revalidate, and wait for all other things to come together, because in this new world of geoeconomics, there are legal frameworks that needs to be created, the policy frameworks of different governments and different national laws and the regulations needs to be sorted out, so that triggers the legal, either both national and international law needs to be aligned with each other. Then the business framework, economic framework has to be created, and they all have to be in alignment. And then there has to be procedures and due process needs to be developed in order for everything to be in alignment. Right, moving forward, it is the game. We are not in globalization anymore. We kind of are in the tapering end of globalization. Nations already started raising the bars around them. It's just not the same game as before. The treaties between the governments are going to be kind of a yen to yen. It's not going to be one plain negotiated instrument where everybody comes together in alignment. that era, even instruments like United Nations are falling apart. Even nations, the nations are having trouble in terms of the unions, European Union kind of unions, which were created for a reason, which still holds water, but then they are struggling to have the common framework, right? And then another thing is the security architecture and the framework, because you can't ignore the security part of it. Although you do the trade across the boundaries, then still the boundary of country exists, and it has to be fall within the security aspect of it. And security not necessarily only the physical border, but also the intellectual border in terms of IP, intellectual property security, in terms of data security, in terms of all other intellectual, the intangible uh, data, commodity, and assets securities, right? So, how to create the perfect balance? First of all, to understand and accept, there are three layers. The let's come to the digital geoeconomics, which is going to be the future, which is what the subject of this topic, right? The tokenized fund, which can come from currency. First, currency has to be converted into, which is a fund, but you need to get into tokenizing it, right? I have explained that detail. We can always have in my conference, in my seminar, which I intend to, deliver from starting from next month, and a one-day seminar on these concepts, deep diving into these concepts. You can attend this conference. We can discuss much detail about how the whole thing can be done. By the way, I'm also hosting a town hall in many cities around the world, where it's just one day evening fireside, poolside kind of event, where we still touch upon these concepts, but it's going to be more informal, and we're going to talk more about how to get involved in my fund and how to do the tokenization. Even if you are fund, I would be love to help, because it's a community, and we can always help each other in terms of how to get the tokenization of the funds and how to actually attach them with real world assets, right? So how the cycle works, right? First, you tokenize the funds and keep them on one side. By the way, there are multiple technologies and multiple. That's what makes it very difficult. That's where a lot of bad actors, a lot of bad technologies out there, a lot of very very bad platforms that can totally wipe your asset, your wealth out of you. So you got to be very very careful. So putting the pieces together, there are technologies, there are platforms involved behind the scene in terms of connecting all the three pieces together. One thing, the fund tokenization is, and also multiple entities involved in it, right? Not sometimes you work with the third parties, companies, and sometimes you do it in house, right? I can guide you in how to actually create the whole ecosystem that works for your fund or your business, right? Now, the fund tokenization is one part. Then you tokenize a fund, make it as a digital. Basically, $1 can be, you essentially create your own currency out of a dollar or a rupee or a yen or a yuan, and then you divide it into how much you really want to play on the digital side, and based on many other factors, you make it divisible by thousand or million. No, it's up to you, right? So you got the pieces of tokens, right? Digital tokens, you keep it. Then, according to Myomics, the framework that I created, this one which most of the people would not understand and would miss it by a large margin, right? Is capitalization. So tokenization is one part. Then the next phase is the capsulization, right? Where the word capsulization comes from is from capsule. In 2020, I published a white paper after 2 years of research called Karma Capsule Network. It's a decentralized, blockchain-based platform, artificial intelligence, basically a neural network, based on Jeffrey Hinton, the Nobel Prize winner. Actually, he got Nobel Prize only last year, but I adopted his basic theory called CapsNet, and then I created reinforced CapsNet by doing further research on it and making some modification on the equations to create a reinforced CapsNet. You can read the white paper in GitHub. You can search Karma Capsule Network. The commercial name is Karma Capsule Network, and the scientific name is Reinforced CapsNet. So the Reinforced CapsNet explains this, right? How to create, capsule. Capsulization is the art of creating your first money, like creating value, right? Getting the value, the intrinsic value from the real world asset. The very first thing is capitalization, right? Multiple form of tokens brought together and captured. The capsule has two parts. One part of the capsule is of funds capsule, right? Then on the other side, you take a real world asset. Probably, the easiest thing to explain is real estate. You take a piece of real estate and tokenize it, right? Digitize it, give form. 1 acre or 1 hectare of land, you tokenize it into a real world asset. I know a lot of people are doing it for years now on the tokenization of these real world assets. But I'm not going to repeat or trying to see that as a new thing. I'm introducing a solid, sound way of creating not a shallow, a deep and highly coupled digital asset that can hold the intrinsic value, which gives value for your fund. Okay, because a fund has to get back to the cycle of return on investment back to the fund. End of the day, you need to get back the currency out of the fund, not to register the profit, right? So the fund has to go through the cycle. It first gets into tokenization, to capitalization, and then to trading the capsule with the other capsules. Now on the real estate side, the real world asset, it could be a piece of gold, it could be a piece of the company, and that also goes through tokenization first and then capitalization first. That capsule is different from this capsule. That capsule full of values. This capsule full of money. Now, money and value has to have a handshaking, correct? In order for your fund to get the intrinsic value, right? That trading should happen in the private alternative investment ecosystem, or kind of a trading hub, right? I have proposed and devised a Karma capsule trading system, alternative investment trading system, but I can help you in creating your own trading system or work with the existing trading systems, which can convert, the digital securities into to capture the actual values. There are some players already existing in the market, but although you have to be very, very careful in terms of who you work with. But if you want to work with me, I'll be very happy to take it forward. Valiant Tailors itself has launched a series of funds called capsule funds. More than 40% of the fund will be used in digital asset space, and then over 60% will be used. 60% will be used in the actual direct funding as well. More and more, based on the growth in this industry, I will be launching more funds in this, and then I will also be happy to work with you as a fund manager to help you out, or as an advisor to help you out in terms of creating your own ecosystem, or put the packaging the whole ecosystem for you. If you want to understand about my fund, how to participate in my fund, you can choose to go on directly one-on-one meeting with me. Just block my calendar. I have put the calendar link in this video and then the articles. You can find me at myakannan.com. Very simple, myakannan.com. And my Substack, either myakannan.substack.com or myomics.substack.com. You will get regular articles and editorial pieces and messages from me. There's also a private side of the Substack, but if you choose to wanted to get more access to our private conversation and much more valuable conversation, you can subscribe to it. But basic subscription is anyway free. So you can be part of the these instruments around me, and around the ecosystem around me. The best way to follow me, right? Or if you are really interested in digging deeper and deep dive about the geoeconomics and the capitalization process and how the whole thing, tokenization, all the concept works. First, please read my book, Myomics. You can find it in Amazon. Myomics, GeoEconomics for the digitally transformed world. That's the topic, title of the book. You can read that first, and then can come to my seminar, you can go to event, event, not plural, singular, event dot valianttelos.com. The seminar will literally open the door for you to not only to my ecosystem, how you can participate, understand the basics of the whole cycle of tokenization, ETFs, and all other modern day instruments, to not just only to secure your current family or the investment fund, but also to grow and multiply them, right? And as I said, I'll be happy to engage in creating a new ecosystem for you based on Myomics and Karma Capital Network. Okay. Until then, have a nice day. Bye bye.